Good weekend and good and happy Mother's Day to everyone for this weekend edition of the financial markets for Friday. And this is May 10th, 2019. We're just after 3:30 p.m. Central Daylight Time. You're looking, actually, the settlement's a little bit lower than this. What a dramatic reversal. Think about it. The market got through the point where we had a very short meeting today with the Chinese. In fact, I was surprised yesterday. They flew in, 5 o'clock meeting in the afternoon. It ended shortly. This morning, they were supposed to start at 9. They begin at 9:30, and there's the Chinese consul walking out. They're done at 11:30. It could not have been a real good meeting. I don't care what the press tells you about it. I don't think there was argument. I think we're so far apart, we'll be friends and we'll be that far apart. And you can count that the Chinese, when they get back home, there'll be their retaliation version as to what we're doing with our tariffs. And I would not be surprised, and I think the market is expecting there's going to be $325 billion of tariffs coming at some point that the Trump administration, they don't have to do it tomorrow. They don't have to do it the next day. It's not a fight like that. It's coming. Be ready for it. Is there time for there still to be a deal down the road? Time is always available with countries. It's not like you're buying a home and that home's going off the market somewhere else. Somebody else has it. So yes, that's always there. The market's digesting it. It's building in GDP, everything else of that nature that will fall on these costs of these tariffs. Now, if you take a look, you saw the bonds and the notes were lower. The energy markets were able to handle this without a problem. The market that gave back a little bit is the Japanese yen. So the pure plays of the safe havens gave up something. Platinum and palladium prices soared today. It's that simple. They just absolutely ripped to the upside. Copper didn't do bad either. And remember, I call that Dr. Copper. It looks at events and it tries to figure out what's going on. Read a report this week where people are saying that 270, 265 area probably not going to be broken for a long time to come, as copper's needed with all these electric cars, all the transition switches that are taking place with our technology. Just copper's used in so many products. If we take a look at the monthly S&P, I don't know. We're down 2%. You want to get super bearish on that? I guess that's up to you to do, but it's a correction, and that's all that it is so far. We're seeing the 18-week moving average of closes marching up each week. It's around the 2803 level. From here, it's about 85 points away. The market did get what we'll call a down thrust going, and that on a closing basis area chart is when a close takes out previous closes. Now, if you look here, you saw that all we had were higher closes all the way up. So can you argue that we have reached a double top area in the market? I think a number of chartists will say that. So that is something to watch. What about how the chart action on the bar chart for the week looks? Big correction. Did it violate anything? That's the bigger question. And the answer is no. On the swing line, you still have the pattern of higher lows and higher highs. And all a swing line does, friends, is I created something that looks at the previous week and it determines, do you have a lower low? Do you have a higher high? Do you have an inside week where you didn't take out the higher and low of that week, and where did you close then? Or did you have an outside week up or an outside week down? Then it draws a line to give you an idea, are you in the pattern of a trend, which in the case of this, higher lows and higher highs are the definition of an uptrend. Take out 2789.50, you break that pattern. What about moving averages? Well, so many analysts use moving averages, you can't afford to not pay attention to them, in my opinion, in some manner. The support of the 18-week average now comes in at 2803. We see that right here. We already know that the break low back right here is 2789.50. So we don't want to see that taken out. And this number, the importance of it is it's over that number. So if the market wants to go back to what I call that line in the sand, where that's the neutral number as I define it on a chart, it's still above the last break low. What about resistance? Well, if we think about it, we really haven't hit the upper Bollinger Bands since October of 2018. Even on this rally, you weren't able to get up to it. We certainly got down to them numerous times in 2018, and we ended up, of course, in that horrific break that we had going into Christmas Eve, and we came back up. That's a sign, too, that maybe the market, in terms of how much punch to the upside, running out of a little steam right there. And I'm sure that some people are looking at that. Another thing to look for, the momentum is still up, but it's starting to arc down. You see how that red line is starting to push down? Now, if that arc gets under 80 on a close, I say it has crossed over into momentum shifting back to the downside. If you got to the 18-week average, that might be what causes that. In the NASDAQ, unlike the S&P, notice you did hit that upper Bollinger Band. So the S&P is a different looking chart than this. You've got the higher lows, higher highs, momentum here, and I believe momentum leads price. Has weakened, and the question is it going to start down from here? Very interesting week coming up in the markets. The Dow's completely different than the other two. Number one, I consider momentum having turned down. Past tense, done. I think it's pointing down now. Number two, you've already broken that pattern of higher lows, higher highs. You've got a higher high, lower low. As you know, I have a theory that when a market moves, often it likes to get back to, if it's on a daily chart, that 18-day average, or on a weekly. If you take a look here, how often do you hit that when you're determining the next thing? Well, that's what's happened. The break in this market did not get up. By the way, the rally didn't carry to the upper Bollinger Band, but it's now gone already down to that 18-week average, and from here the market has to make some decisions. In the Russell, where'd you pull back this week for your support? The low of the week was 1545.70. The low 1547.50 for the 18-week average. Went right to it, looking for support. Momentum, I'm fearful that when we reopen Sunday night, momentum is going to point down in this market. I realize we're having an end-of-the-week rally, but you're still down 2.34% here. You're down 2% in the Dow. NASDAQ is down 3%, and you were down 2% in the S&P. Those are not big corrections. A bigger correction could be the 5 to 10% area in the market. In the VIX, I don't know how many of you are yet subscribing to my morning video, because I had a lot to say on the VIX this morning in it. And remember, I put that out, I start recording about 6:15 a.m. Central Daylight Time. And I'm not surprised to see this market down. Go to that video if you don't believe me, and you'll see what we're talking about. And I'm looking at this market pulling back now. I think that punch we had to the upside may have been over in the near term. That's basically what I'm saying. In the 10-year notes, we still have an uptrend. We still are defining the market with higher lows, higher highs. You're still over the 18-week average. That keeps the bias up, and momentum has flattened out. It's not pointing down or up. In TLT, you're still in an uptrend with higher lows, higher highs. You peaked out, not this week, you really peaked out your momentum going back into the March time frame. You haven't even gotten up to those prices. Momentum-wise, the market is sort of neutral here, trying to pick up a little upside to it. In the dollar index, I'm concerned. There's divergence on the chart. Momentum is pointing down. You've had the pattern of higher lows, higher highs. You hit the upside target of the upper Bollinger Band, couldn't break out of this overall sideways action. Now, if this coming week we take out 96.87, the swing line will turn from having higher lows to one of lower highs, lower lows, and a close under 96.54 would put the market into bearish bias, swing line down, and momentum's already pointing down. The bulls have to defend this area if they want to be able to keep the trend alive to the upside. In the eurocurrency, you've been in a downtrend, lower highs, lower lows. You hit 3 weeks ago the lower Bollinger Band. You didn't get under it. If next week this market gets over 131.10, keep your eye on it. 113.10, I'm sorry, I said that wrong. Then if you were to close over 113.40, and that's what the bears have to defend against, that would turn the trend of the market up, and momentum would jump with it. So those are the turning points on the chart. I'm not saying the trend is turning yet, but I'm giving you some points. Excuse me. In the British pound, every week's a new event in the British pound, as you know. We finished at 130.30 area under the 18-week average of closes. The pattern is bearish. Lower highs, lower lows. The bias is back to the downside. To negate that thinking, you'd have to take out last week's high of 132.08. If the market can continue down, and that's the if, could the lower Bollinger Band be the next number in play? And momentum is pointing down. I think the bears have control of that market. In the Canadian dollar, you got so close to that lower Bollinger Band and you managed to pop away from it a little bit. The pattern is still one of lower highs, lower lows. Momentum has been pointing down. It's starting to flatten out a little. Interesting market. I wonder if that and the peso are looking at what's going on with us in China, and I'm hoping somebody's eventually saying, why don't we get our deals done with our Canadian and Mexican friends and wrap up this North American area for us? In the Japanese yen, you still have the pattern of higher lows, higher highs. Now on the pullback today, you're still up on the week 91.20, so you're still over these 18 and 100-week averages. If this market should decide to pull back on a test because maybe the safe haven plays are coming out of the market, look for that to be your support area, 90.50 to 90.64. I don't see anything on this chart that actually turns the market into a bear play. The question is where the support is more than anything. Let's assume that worse things happen during the week and the trend stays up here. The upper Bollinger Band could be in play there. If you broke through 89.34, and that's 200 points from here, well, I guess you'd then say, if you didn't get over 91.85, that you're into a downtrend, but wherever this lower Bollinger Band is would be some support. Bitcoin, still acting bullish as far as I'm concerned. Higher lows, higher highs. You do realize this market has practically doubled in value since December. And we're seeing more and more companies, and I'm talking the Fidelities of the world, the E-Trades, they're embracing this, and it appears to me that those third-tier cryptocurrencies, they're just not catching on. There may be a speculator's dream. Bitcoin seems to be the winner so far by attrition, and why the Board of Trade got out of it, I can't answer for you. Not listing new contracts. Excuse me. In the WTI versus Brent oil, you've had this recent rally back up. Which oil's at risk if something happens in the Middle East? That's part of the problem. It's the Brent. We know we're putting our strike group. It's gone into the Red Sea now, from what I understand, or Mediterranean somewhere. I'm not exactly sure of where. I don't think it's in the Strait of Hormuz. But we keep sending messages to Iran that if anything happens to our ships, we'll consider whoever does it part of Iran. So it keeps a bid into that to a degree. Take a look at the higher lows, higher highs. You've hit your upside target. Again, that first challenge of a Bollinger Band is often an area pros take some money off the table, be it to the upside or downside. That doesn't mean the market has to stop there, but it's a probability, a pretty good one when you first get to it, so you look at that. Support back into the 66.89 to 66.10 zone, the combination of the 18-week, 100-week. There is divergence. Momentum is turning down while price action is pretty flat. I always look at that. I don't consider on the weekly charts that the slow stochastic gets overbought or oversold. It's either pointing up, pointing down, or neutral. In this case, it's pointing down right now. In WTI crude, the same thing. The difference in our WTI, by the way, higher high, lower low. Now it's interesting. I saw the rig counts and we're down to 805. With this higher price, we're not seeing the rig counts increasing. I wonder if that has to do with everybody waiting for pipelines down the road to come on. But the market's gone into a pause stage. It was led when momentum turned down. Supports in two layers under the market. First, the 59.53 area, the 100-week average, then the 18-week average at 58.19. Gasoline's in a bit of a corrective mode. It has not left the up thrust that it's got in momentum. It's still got a bias to the upside, and it still has the pattern of higher lows, higher highs. The driving season hasn't come yet, so we'll see what goes on. In the heating oil market, a bit of a correction there, so that's where I'm at with that. Now, let's talk about where we're at in this, our morning subscriber video. Each morning, at 6:15, I sit down and I start recording 40 futures charts, 5 ETFs. I'm not in that video. It's on screen. It will look like you're going to see the charts that come up behind me now. Now, the beauty of it is I do everything in a sequence. And you're going to see more studies on this than you do on these regular videos that I put out on YouTube. But I'm able to be freer in these because I can say things that I can't in public videos. These are for subscribers. So when I'm covering the markets, I'm assuming you got your cup of coffee. It's pretty early in the morning. It's a recording. You can come in anytime you want. But I'm going to cover in this sequence. And by the way, we forgot to put the metal market sequence in there. It'll be in there. Here's something new that we did this week. We, on the bottom, know that it could be difficult to pull between all these charts. There's 45 charts. So what we added is on this side of the chart, there's now a syllabus. And it'll tell you if you're in the grain section, whatever you want, you click it, it'll take you right there. Plus, if you put your cursor over the drag bar that we all see in these players that they have, it tells you what section you are. Instantly, you go where you want. What I'm able to do in these videos is throw out very specific ideas. Buy here, sell there, do this. It's going to be specific as can be. I will at that hour have already read up and I know what's going on in Europe. I know what's going on in Asia. If there's been reports out, Chinese growth, whatever it might be, I'm going to be talking about it. I'll be able to tell you what I think the pros are doing in the market and what that chart action is looking like. The idea is really that you're like this, if you're like me, you're wondering, gee, I want to put out a trade. Is this one right? Is there something I'm missing on it? That's the idea. At least if you're watching my videos and a regular viewer of these, you have a reason that you're watching them. Let me take you the next step. Is it expensive? No, it's 26.5 cents a day to give it a try. You're not signing any contracts. You're giving it a go. If you like it, you can either go month to month or you can take a one-year subscription that I offer another price break on. It's simple. But let me explain it all to you by you going to our website. On our website, go under Education or Research, pull down Ira's Morning Subscriber video, take a look. It explains everything. You sign up right there, and away you go. It's all that simple. If you need further help, you can always call my staff during the week. They'll be happy to talk to you at this number. If you click up here, it'll take you where you have to go if you're watching me on YouTube as well. In the meantime, happy Mother's Day to everybody. Like you guys, thanks for watching, and you have a great weekend.